Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had an absolutely amazing day yesterday. We're going to do what we do each and every day, looking at 10 to 12 futures markets for potential breakouts and reversals. Let's dive in. S&P this morning, we're down 3.5 points. Yesterday, we had the huge gap down and then the overnight rally. And my thought was that we may get a chance for a little bit of a long trade above this 3,000 number, and we got a little bit of a breakout above there, but then it just kind of just dropped down from there. We didn't really get much movement out of it, really one way or the other. No big hammer on a loss. It just kind of stalled out on us, and I think that that's further proof that we may not get a lot of movement heading into the Fed announcement. Now, we did come very, very close to our gap fill here, but missed it by about a point, maybe not even a full point, maybe even 2 ticks. And so whenever we miss something by just a few ticks, what I need to do is convert that over to a confirmation entry, which lowers its overall probability. So I'm a little bit more concerned with it as of today. Now, I will say we do have some high upper wicks in the overnight sessions, but there's really, in my mind, no reason to force any sort of a trade one way or the other. We could get a breakdown from here, but then it could also just continue to meander sideways. So I'm going to leave it be for the day and kind of rely on some of my other levels. I don't have a quality demand level down here to rely on. So a breakout to the downside actually gives you the best entry probability just for a big move. And on a 4-hour chart, we technically could have put in a lower swing high here. I don't have a lower swing low yet to speak of, so no real reason to be shorting. But you could, if you are so inclined and want to give it a shot, look for a breakdown possibly below this 29.93 area if we do break down below there later. In the NASDAQ also came just below the gap fill level. No real trades were set up in here yesterday, and there's no reason to do so. But once again, the NASDAQ actually showing a bit more weakness with these high upper wicks. I think we could roll over from price right here. Crude oil. Yesterday we talked about crude, and we were talking about our candle-to-candle long opportunity. Leave me a comment down below if you're able to jump in on that candle-to-candle long, as we did get a really nice run out of that particular trade from this 58.83 level. We got a good reversal off of that zone. Price rallied up almost $4.50 from that level before retreating yesterday in the afternoon times. Now looking at a 15-minute chart, where might there be an area? I'm going to look to right here, this little level right in there for a potential reversal, knowing that my stop has to go below that pivot. I'm going to use this area here as a potential reversal. It's a very small level, which leads itself to a pretty nice profit objective. Inside of gold, nothing really to add in from gold from yesterday's trade, as we are still in between our levels of demand and supply. Let's take a look at our bonds and currency markets. In our bonds and currency markets, first starting with the ZN, in our 10-year note, we are, just below our supply level, but we're doing too much basing below this supply level. Basing below a level is the kiss of death, which means I remove that level. I'm not willing to take the risk on that trade going against me, and so I'm going to take it off at the moment. Be aware for a potential breakout to the upside from here. In the Aussie, unfortunately, we had our gap fill trade. Price did everything it was supposed to do, came right down into the level, and then went right down through it. Now, I'm not sure if anybody was able to take that one or not, because it did break down in the Globex session. I know a lot of our traders don't trade, don't take entries that time of day. That's the worst time of day, right? Lowest. In my mind, the lowest probability is after the U.S. market open, before the European market open, that part of the Globex session, and that's that's evident right here. However, oftentimes that old support will become new resistance, and we're starting actually to trade down from that level. And looking at that on a 4-hour chart, that actually potentially gives us a rollover back to the downside. So let's be aware now of shorting opportunities in here, and that one big red candle could be a decent reversal point. Now we could also just have a straight breakdown from here, as we are just chopping above this area. So I don't know that I would take the breakdown immediately from here, but I'd like to see at least 1 or 2 more candles this sideways before a breakdown, but I think you've got an opportunity for that in there. The Euro level, we got a little bit of a touch, and if you follow the 6 candle rule, 1, 2, 3, 4, 5, 6, we got really no movement out of our Euro trade as it came into the zone and really didn't do anything. It hasn't done anything really since its inception. And so the 6 candle rule says that we manage the trade accordingly and move that stop up to break even. So no real loss, no real hit on that. Inside of the Canadian dollar, we got a good little move away in our Canadian dollar as it came back to our reversal point, went down and hit target 1, and then came back up to the area. Now it's still not technically been stopped out as of yet, so you still may be riding it. And if you are, at this point, I would move your stop down, down into here. If you took it to break even, then you probably took some money off the table at target 1, which was our opposing level, which was a nice little trade, and you can now move it down into this region. So now, where's my next stop? Well, looking at this, I don't know that I would want to trade the gap fill level with all of this basing here up above it. So you might look, there's really nothing to force. I don't want to force the trade. I don't think there's anything in here for me to lean on. So let's just move on to our next market, shall we? Looking at the Great British Pound and Japanese Yen. That's our next 2 markets. Both of them are between their levels of demand and supply. But those levels of demand and supply are getting a little bit closer here in the Great British Pound. I still like this setup for a reversal, getting closer into that region. I don't necessarily want to see us meander into it. I want to see us a nice move into the level, and that looks like it's coming into play. And then in the Japanese yen, we're well below our supply level that I had prescribed here up above. I would normally take a potential breakdown here based on this recent price action if it wasn't for those 2 wicks, and those wicks I think scare me out of that as a trade possibility. So if I slide down to the 15-minute chart here in the yen, I don't really have great trade opportunities on either time frame. So I'm going to once again not force a trade. There's nothing really there that's screaming, hey, look at this. So I'm going to let it be. And I think we're seeing that in a lot of our markets. And, part of the reason why we're seeing that today is is waiting on the rate cut possibility, or is there going to be one, or is there not, and what's going to happen? And so the market may chop sideways a little bit until that point. So don't force trades. Allow the market to come to you. If you've got any questions, please shoot us an email, support@tradersarmy.com. Thank you guys so much for joining us today, and until tomorrow, see you.